Hey, everybody, welcome to the Raghee Report. This is Raghee. And this is also my report. Great to see everyone, gang. I hope you had a good weekend. We're getting a jump start on the week, and we are looking at preparing for next week and also what it is that as we take a look at the Asian session, what kind of really early look are we getting at next week's action. Next week is not any normal week. I know we've had unusual week after unusual week, different hot zones of varying degrees of impact, but we do have end of quarter coming up. And end of quarter can very much, like end of year, intensify a lot of positioning. If you are, for example, imagine, maybe you are listening, but imagine if you're managing hundreds of millions of dollars or more, maybe less, whatever it is, and you've got to allocate that capital. Nobody wants to see you in cash, right? If you manage money, some cash is okay, but people want to say, well, what do you have me in, right? Think about that as a job and think about that, what that would potentially force you to do. And then think about that at scale. And that's the way I look at the end of the quarter. And at some point, what we need to remember is in terms of which sectors, which stocks are unceremoniously going to be dumped, which stocks, which sectors are going to be added to, bought, etc. It's a lot like end of year. Typically, what I'll look for is weakness is going to get weaker. This is not a time for bottom picking typically. And strength is going to get stronger because this is one of those significant sort of holdings, right? If you're letting someone else manage your money, you look to see what you've got at the end of a quarter. You might look every month, but quarterly is probably a little bit more intense. And then end of year, what do I have? What do I not have? What is the market doing? And how is my portfolio positioned against that view of the market? And that's the way I process it. I try to think really basic about someone having to present someone else, these are the stocks, these are the sectors you have exposure to in light of what's happening. And I think the more we can keep it psychologically, don't get into the macro of it all, just the psychology of having to present to somebody, this is what I've done for you the first 3 months of 2023. And it starts to make a lot of sense, whether that be the end of the year or the end of the quarter, the kind of behavior we tend to see. Again, strength gets stronger, weakness gets weaker. And therefore, I'm not looking for, as a general rule, financials, regional banks to do much better into the end of the week. I am looking for corners of the market, perhaps like staples, maybe utilities, to be a little attractive. Tech, of course, is as good as it gets because of, as we've talked about quite a bit. We touched on this as well in the report this week in the market. Those of you that have this current subscription or are in my Sector Secrets Mastery, you have access to this. And one of the things we spoke quite a bit about was the exposure that financials have to the Dow and the S&P and how that's, it's significant, right? It's disproportional. Dow is number one weighted sector, S&P is number two weighted sector, and in the Nas, next to nothing. In fact, in the NASDAQ and in the XLK, it's under 1%. Sometimes I think actually under 0.75%. So it's insignificant in that regard. What do we have coming up aside from end of quarter? More FOMC speak. You'll notice Monday's pretty darn quiet in the US. We have FOMC member bar 8 a.m. on Tuesday. Consumer confidence numbers on Tuesday. We go into Wednesday and we go into pending home sales. Crude oil inventories pretty quiet until we get to Thursday with GDP. Now, GDP is one of those significant economic pillars. Inflation, jobs, growth. Those three are the main pillars of macroeconomics, certainly the ones that the Federal Reserve will use as justification for their messaging and for their monetary policy decisions. So GDP on Thursday is going to be a big one. And then, of course, as if that isn't enough, 15 minutes before the bell rings to close Thursday out, here comes Treasury Secretary Yellen, which is especially interesting because Friday, realize 15 minutes before the Thursday session ends, Yellen's going to say whatever she's going to say. And then Friday is end of quarter. And the most important hot zone for this week is not Thursday's GDP. It is absolutely that core PCE price index on Friday at 8:30. So massive amount of data. And again, Yellen in play. Why is this PCE so important? This is the Federal Reserve's favorite inflation indicator. And if inflation is the number one macroeconomic pillar, if it's the one that Jerome Powell is saying, hey, this is the most important thing to me, this is why I hiked rates in March, this is likely why I'm going to hike rates in May. This is why he sort of loosely, casually said he's not going to hike rates in, they don't see rate cuts. They don't see rate cuts in 2023. Again, Fed fund futures are reflecting something completely different. However, that core PCE, if it were to tick up, watch how quickly the rate cuts get pushed, probably towards the end of this year, if not off this year altogether, regardless of what's happening with the banking crisis. If that core PCE ticks down, July is going to take off in terms of the first rate cut. Very important, 8:30 a.m. Friday. I cannot underestimate that. And we cannot, no hyperbole, gang. It's a huge one. It's a huge one. All right. So let's get into what we've got going on here. And by the way, when I talk about the Fed fund futures, if you've never looked this up, it's the CME FedWatch tool. And if you Google CME FedWatch tool, just Google what you see there in the title. If you Google that, you will get this link. So just Google that and it will bring you to this link. And this is what we're using to understand what expectations are for the different meetings, okay? It looks like a hold for June after we get possibly, a hold in May, hold in June, right? The hike isn't even here anymore. There's not even another quarter point hike. That's significantly discounted at the moment. And then we get possibly that cut in July from where we are right now with that 4 3/4 to 5% target rate that we set at as of that March decision, well, last week's decision. All right, let's jump into it, gang. First up is, what do we have here? Let's see. Jet Jockey says CME predicts another rate hike. Actually, we don't have that right now. I mean, it could change significantly, but we don't have that right now. Yeah, for right now, and remember, these are always changing. These expectations, so it could change. This is, for the most part, what we're expecting. There's a minor expectation because this would actually represent the quarter point hike. This here would represent the whole. But I love that you're looking at that there, Jet Jockey. Awesome. I love DPMR, but overnight weekend price gaps catch me. It can catch anyone, right, my friend? We'll stick to 1 through 3 day strategy. I love it. Do I adjust DPMR targets with HPMRs after entering? No, Jet Jockey, we do not. If I'm trading a 5-minute time frame, I stick with the HPMRs. If I'm day trading, if you're looking for, actually, let's do this. Let's bring up a 1 hour DPMR layout and the 5-minute HPMR layout. What's the difference? This is the hourly volatility study, hour to hour. This here is the daily or session to session volatility study, right? So back in 2010, I wrote a book and started introducing the concept of historical price movement ranges. And it was something that actually, to start with, another company, AutoChartist, many of you have heard me talk about it before, was curating this data. And I was using it 13 years ago. We've since moved to a separate data source, but the process that I created with their data, I thought, wait a minute, if I can see the hourly movement from 9 to 10, 10 to 11, 11 to 12, and so forth, can't I then also project the resistance and the support based on that data, right? And even though we moved on, again, from that data, we're curating our own now, shout out to the bot. Once you have that process, and that's what I created back then, now we just said, hey, wait a minute, I still have plenty of data. Now I can look at support and resistance based on each session, not each hour, right? So they're completely different groups of data. So if anyone out there is looking for zones, predetermined zones that update hour to hour. So they're very responsive. They're looking at historical price movement range, yet they're responsive to, we all know this, there's a difference in price movement range from 9 to 10, 10 to 11. There's a difference in price movement range from 1 to 2, 2 to 3, 3 to 4 in the afternoon East Coast time. And that's what that hourly price movement range will reflect. So that said, Judge Jockey, no, if I've got a 1 hour time frame, I know what my support and resistance are. If I'm day trading, and I still love to day trade, gang. If I am day trading, there is simply nothing better to find those zones automatically on a chart. If you're looking for volatility zones, there's just nothing else that does this, right? This is a unique tool. This is a tool that's very much separate from price actions, very separate from volume. And I can say that because, no one else does it. So, and so it's looking at the market in a different way. And that's the difference between the daily price movement range and the hourly. And that's why that's a no, my friend. I hope that makes sense. One's for day trading, hourly price movement range. One is for swing trading, like that 1 to 3 day strategy you're talking about. That is the swing, the short-term swing end of the people's reaction, people's psychology. That's what volatility is, right? Okay. All right. Next up is, let's see here. And by the way, gang, I have not yet updated my hourly price movement ranges. We're going to be doing that this week. So these are our current HPMRs. We have brand new HPMRs coming out probably tomorrow. And these are going to be both the DPMRs and the HPMRs. So these zones that are on my screen, as soon as we start tomorrow's session with you all, we're going to be day trading in the Sector Secrets Mastery. These will be completely updated for tomorrow's session. So pretty cool. All right. Next up is... I've been trying this bubbly water. It's called Spindrift. And I guess they put a little bit of juice in the water. It's quite nice. I got a grapefruit one that I'm rocking. It's pretty interesting. All right. So no coffee for the Raghee report. All right. Next up is, hey there, Gone to Earth. Good afternoon. Yes, good afternoon. Good evening. Thank you for all. Hey, my pleasure and my job. Absolutely. All right. Are you judging my grapefruit bubbly water? Bot? Well, you can't drink anything. You'd short circuit. So, all right. Next up, Mr. Walker, how are you? Does your trigger to enter a trade change depending on the strategy? Yes, of course. Of course. Right? If you're looking at a swing trade, right? If you're looking at a swing trade, Mr. Walker, of course, right? The trigger is going to be a completely different set of tools. It could be, right? If I'm trading a trend, I could look for mean reversions at the wave. I could also look at the HPMR. I could look for mean reversions to the wave on the hourly. I could also look for a DPMR. If I'm looking to fade zones and I'm using a slow stow, again, so absolutely, right. It will be different triggers, you bet. So next up, all right, next up is, good evening. Hey there, CNE Deborah. Good evening. Were I able to get the updates to the DPMR? Yeah, tomorrow. Well, so that happened. So gang, nobody's in the office over the weekend. I know, shocking, right? So Lorna Bot pull those, I don't know, Friday, maybe Saturday. And then tomorrow, the office will push those out at some point. An email will go out, and then we'll all have the fresh DPMR. So yeah, they're not there on a Saturday or Sunday. Right. So only the Lorna bot, right? Because she's a bot. But yeah, we'll have the new ones. I'm not even using the new ones right now. I'll be using them tomorrow. Okay. Next up, hey there, Jack. May I ask where I can locate the weekly newsletter? Hey there, Jack. So yeah, this is something we just started doing this week. And some of you might be familiar with This Week in the Market. I've taken it over as of this week. And it's in the if you're a subscriber currently, or if you're a Sector Secrets Mastery subscriber, it's actually in a quirky little place. We're going to be redoing the dashboard because obviously, with my taking it over, we'll be situating things in such a way that from here on forward, you know how I'm looking at the market, my macro, my levels, my tools, etc. So we'll be cleaning that up. If you head on over to the Simpler Trading website and log in, and you go to the this week in the markets icon and you pull that dashboard up, you'll see that it's in the archive. So for whatever reason, it's not here right now. I don't know why, but if you go to the archive, this is the one where I have started from here. All right. So from the 24th forward, I'll be doing the newsletter. All right. So yeah, you can find it in the archive in the member dashboard of this week and the market. Okay. So it's there. Thank you so much. And if you're in the mastery, again, head on over to your main dashboard and this icon for this week in the market, which is a little, I guess, a little megaphone there. That will be something you can access, this thing right in here. Okay. All right. Cool. All right. So let's get back to the chart, shall we? So a few things that are on my radar for tomorrow is, obviously we'll see what kind of market we inherit from a day trading perspective tomorrow. And again, for those of you that, are wondering, Rag, are we still day trading? I know you just did a class with DPMRs, but are you still using the HPMRs? Of course. Each tool works in a different time frame. So again, for day trading, really short term, in and out the same session, the hourly breakdown of historical volatility is going to be the most powerful. When we're swing trading, overnight positions, anywhere from say 1 to 3 days on the shorter end, say 2 to 5 days in the middle, and 5 days and beyond in the longer end of a short-term swing trade, daily price movement range is a yellow and gray zones. So the first thing is when I start day trading in the morning, what the NASDAQ is doing now really won't necessarily be pertinent. There we go. They won't necessarily be pertinent until about 7 a.m. And I've got a pretty good idea of what we're inheriting into the 9:30 bell. But what I can do is I can start to scan my 1 hour. So let's move the 5-minute out of the way. What I can do is I can start to look at my 1 hour and my dailies and find out, all right, let's take a look at the S&P, right? Let's take a look at the NASDAQ. Are any of the 1 hour charts in a trend? Are any of the daily timeframes in a trend? Getting the most important indicators to start with. Step number one, always down in here. For those of you that just took the daily price movement range masterclass, what's one of the indicators we included? In fact, we've been including them in the last few classes. That multi, right? The multi-trend. The color of the lower row of the multi is the decoder ring for trends. So if you're wondering, all right, you know what? Let's dive into this for a moment because this is really important. Most traders will start with whatever their favorite indicator is. I've got a chart full of favorite indicators because most of them are either my custom settings, like a really slow stochastic, and the rest of them are tools that I've created. So, of course, it's easy to fall in love with your own tools. But the most important thing is the checks and balances. Kind of going back to Mr. Walker's question earlier about do my triggers to enter a trade change depending on the strategy? Absolutely. And I just realized I forgot to do this morning or this evening is put our clock on the screen. I love having that clock up there. There we go. So the really important thing here with did I not do that right? The really important thing here is if I'm looking at the overall market, I guess I can't put it on there right now. All right. If I'm looking at the overall market, what time frame for each. So overall market would be what? What's going on with the indices? What's going on with the treasuries? What's going on with the currencies? What's going on with the metals, the energies, etc. Right? So we talk about the market. What corner of the market? What symbols am I looking at? Well, which symbols have a trend or are chop on that lower row, that multi-trend? So if you're wondering, okay, Rog, how do I know what the momentum is? It's the top row. How do I know what the trend is? It's the bottom row. That's how easy we've made understanding momentum and trend. Well, the 1 hour NASDAQ is neutral while the daily is in a trend. So I can think about buying the dip on the daily, but I won't on the 1 hour. When it comes to the S&P, both those time frames are in chop. What if I head on over to the XLK, the most important sector of all because of its weighting in each one of the indices? The 1 hour is in chop, the daily is in a trend. All right, what about financials? Have financials recovered in any way? No, the downtrend on the daily is still very much intact. However, we might inherit a neutral 1 hour. So if there's an opportunity for short-term buys or shorts, it might be on the 1 hour, but I'm only allowed to be a short seller or get long puts on the daily. And by the way, just a reminder, when I day trade options, because we day trade futures, we can day trade stocks, but what about when I'm day trading options? Long calls, long puts. We keep it unbelievably simple. In fact, I even recommend just doing it in a cash account so you don't have to worry about the pattern day trading rule. We'll talk about this more during Charts and Coffee because it's easy sometimes to forget, especially after I've had a class say, Rob, are you still day trading? Absolutely. Are you still looking at volume and the volume max? Absolutely. Are we still going to be looking at swing trades? We can do all of it as long as we compartmentalize, right? We can day trade during a certain hour or two of the day. We can swing trade in the remainder. So as long as we compartmentalize, we can do all of it, as long as we know which tools to use where. So the way that I'm going to prepare is just start going through all the different sectors, all the different stocks, and ask myself what's neutral, what's in an uptrend, what's in a downtrend, which significant stocks are in uptrends, which ones are in downtrends. Notice Apple. And it's hard to be really, really bearish when Apple is in an uptrend. Remember, Apple and Microsoft, and I think I put this in this week's newsletter, it's about 13.5% of the NASDAQ. Just those two stocks out of 500s. These two are 13.3% of the S&P, Microsoft and Apple. And I'm pretty sure I did put that in the newsletter this week, just to give you an idea of how important high concentration weighting is to overall market analysis. So, Jack, anyway, I kind of went off at a little bit of a tangent there, but yes, you can find that in the dashboard under This Week in the Market. And if you're a Sector Secrets Mastery member, that is already active for you. So you should be able to access that now. It'll be in the archive. We will be redoing that dashboard. And if you're a current This Week in the Market subscriber, it's also in the archive. All right, next up, CNE Deborah asks, any idea on how to attack tomorrow's market? Oh, well, that's exactly what I was just talking about. So great question. That's the way I'm going to go about doing it. I'll assess what the day trading environment is closer to the bell. I'll start looking around 7 a.m. in case I want to do any pre-market trades, which I really don't do all that often. And then the homework that I can do tonight or even early tomorrow would be which 1 hour time frames and which daily time frames are in trends. Take a look at Microsoft. 1 hour trend, daily trend. So this would be on a bullish watch list. And if you take a look, gang, our watch lists should be very short. They should be tight. They should be succinct. And you'll notice that's exactly what I share in the newsletter. Is it a watch list of everything we could possibly trade? Of course not. If I'm looking at hundreds of symbols or 100, 200 symbols or 5 dozen symbols, that's not really helpful, right? I don't want to have to scan through that many disconnected names. I want to find the names that are moving with sectors, the names that are moving with each other. And that's what you'll find in the newsletter this week at the end of it. And by the way, those of you that do have it, if you have any feedback for me, let me know. Let me know. This is definitely a newsletter that will evolve with whatever it is that I see in the market and whatever it is that you all are looking for from me. So it's the first issue of hopefully many, many, many more. And, let me know what you're looking for, what you're needing to prepare for the coming week. Okay. All right. Next up, Gone to Earth says, really enjoy looking at your indicators. You think in the near future you would sell them separately like the multi-trend. Right now, it's funny. I don't remember which ones we sell separately. Gone to Earth, what I try to do whenever I have a class, even the basic level of the class, which usually comes in very affordably, $497, $597, things like that. We include the indicator. So I will tell you, anytime I do a class and I include the indicator, I'm going to teach you how to use it. What are the settings? What are the setups, right? And then you get the indicator with the class. And I'm pretty sure when it's a standalone, it's not going to be as well grouped, right? We always put toolkits together for the class. So this last toolkit was multi-trend, Darvis, grab, wave, propulsion, things like that. So I'm not looking for, I don't want people just to think that a single standalone indicator is going to solve all the issues. What I like to do is find a way to make it really, really affordable for someone to learn how to use them. And then it's included in the class. That's why almost every one of my classes for the past year or so includes the multi-trend. So it's just a better bang for your buck, to be quite frank. All right. And ultimately, we've been tweaking this thing. One of the things that we're doing is testing the multi-trend in some cool ways. And what that means is, how do we take advantage of the best look at when momentum is going bullish, bearish, or neutral? How do we get the best look for when the trend is going bullish, bearish, or neutral? So many of you know I'm always testing things to try to make them better and better, and the multi-trend is no different. All right. So, but no, the multi-trend actually is included with the Sector Secrets Mastery membership and included with most of the classes that I've done in the past year or so. All right. Next up, Mike asks, are the HPMRs included in my mastery or is it an additional fee? Mike, the HPMRs have been available, the indices, Russell, S&P, NASDAQ, Dow, those have been available in the futures room as well as in my mastery for years now. The mastery gets an extra pack, which is the Russell ETF. So IWM, DIA, SPY, and QQQ. So I've made the indices available for many, many years, and I will continue to. They're the most requested HPMRs anyway. So we've always given those out to futures members and my mastery members with the subscription. And then if you want the bigger list, which I think is close to 100 symbols at this point in the hourly price movement ranges, that's a different subscription. Correct. If you want the broader, bigger list. All right. So I hope that helps. All right. 109. Bot just told me 109 symbols on the HPMR now. Wow. Okay. So next up is, what are my thoughts on DPZ? Sure. Ooh, downtrend, my friend. Yeah, downtrend. This is still a short the rip. South of the 200 propulsion, red candles, red multi-trend. Yeah, it's a downtrend. And I would short the rip on that. Yeah. Okay, cool. All right, gang. Gosh, did 30 minutes go by already? Wow, that was quick. As always, gang, this week in Charts and Coffee, if you join me for Charts and Coffee, we're going to talk about day trading. I don't want the day trading to go too far into the woodwork because we're still using HPMRs. We're still absolutely day trading. And if you want to know how I find the zones, right, these automatically placed zones, whether those be the support and resistance of the Darvis 2.0 or the volatility zones of the HPMRs, that is absolutely the best way I know to decode intraday price action for day trading. And then once we step out to swing trading, we need to curate data a little bit differently, right? Because expectation for 1 to 3 days or 2 to 5 days or 5 to 10 days or more is, again, a different set of data that we need to look at. And that's when those DPMRs kick in. So we'll talk about some day trading. We'll talk about some swing trading this week. And if you're looking for more insight, join me at 9 o'clock, Monday through Friday, at the Simpler Trading YouTube channel as well as my YouTube channel. We have 109 symbols supported in the DPMRs. We have 105 symbols supported in the HPMRs. All right, gang. So as always, thanks so much for being here. Thank you for the questions. I'll see you tomorrow morning for charts and coffee. All right, gang. Enjoy the rest of your weekend. Be good to each other.